Hello everyone, happy Sunday. Today is a bit interesting. I generally don't like to get too bullish at levels of resistance, but there are a few things that are starting to look kind of bullish. So in today's video, I'm going to give you guys the rundown of how much more room I think there is to go in the market. And then we're going to look at potential downward targets on the market if things fail at the levels that I think they will. All right, so without further ado, let's get started with the video. So there are a few main reasons why I'm looking a bit bullish. Here's number one. So the first one is the standard deviation. Sorry, I meant advanced decline. So this is not standard deviation. The first reason is the advanced decline indicator. So this right here is the advanced decline indicator. And when things are in the red, it means that the market is pulling back, obviously, right? And the more in the red it is, the better the bullish opportunity is, okay? But now what is also apparent is once this advanced decline indicator starts to cross green after being red, okay? So generally it's the same concept as a crossover. When the momentum goes from bearish into bullish, the market tends to be bullish as well, okay? So now what is different here is we are at all-time highs, and we've consecutively made all-time highs multiple different times. The last time the advanced decline indicator was negative while it was making highs was most recently in July. And what ended up happening was we were still red, as you can see here. We were still red, and we ended up continuing to just stay red and make new all-time highs. We turned green afterward. So now my point is, this was a similar situation to what we're at right now, okay? And this was extreme buying pressure. So this extreme buying pressure, so my point is, okay, overall we're bullish potentially in the short term, but I don't think that it will last. So now my point, to wrap it up, is most similarly to back in June and July, right? We were knocking at all-time highs. We gapped up. We were showing strength, knocking at all-time highs. We gapped up, knocking at all-time highs, similar to what we're doing right now. The advanced decline indicator was red at highs, and then we ended up shooting upwards. Red at highs. Are we going to end up shooting upwards? That's the question. But currently, just on paper, we're knocking, and we're starting to show remnants of past performance that could potentially take into effect on price now. So that's number one. Reason number two, the MACD indicator. So this right here is the baby, the MACD indicator. All right. And what we can see here is that whenever the market crosses above, it is bullish for the market. And it's starting to hint at crossing upwards. If this ends up crossing upwards, if the faster acting MACD line, this blue MACD line, crosses upwards and continues strength, then it will pull this slower acting MACD line upwards, okay? And this is across the board on the NASDAQ. It's on the large tech stocks. You could see the MACD is starting to move upwards, even on the Russell. I could go down the list of all the tech stocks. Same concept. The MACD line is in a space where it could cross above, and if it crosses above all of these stocks, everything looks like they can continue upwards. So the issue, right, for this, just the issue for being bullish here is that just logically it doesn't completely make sense because we're at all-time highs. From a trading perspective, going long here, so now just in general, right, just giving you guys thought process. From a trading perspective, even going long back at the end of June into July was not a solid trade. Up here, it made sense to average into shorts, because when something made like such a tight move like this, after it gapped up, the market starts to get fatigued. And as the market gets fatigued and we just start to skyrocket into just a very, very abnormally strong move, those do not sustain themselves. And because we had such an abrupt, strong, monstrous move back here in June and July, it led to that much more of a crash downwards. And that is currently the issue here. We cannot really go long up here. We're already holding on to longs up here. Personally, I think the overall market only has space to around 580 to 585 area, and from there, essentially we should get a pullback. So we might have another $15, $20 up. We might even overshoot 600, but if it happens quick and it just continues to rip, similar to what happened in June and July, then it's not a sustainable move, and we should get a pullback. Healthy, nice pullback, which ripped into new all-time highs, similar to June and July. So we might get a rip upwards, get a pullback. Once people think that the market is about to collapse, we might get some war news into the highs. Something, there might be like an invasion of Lebanon, that could cause the market to fall lower. Let's see. A lot of things can happen, but so far, it doesn't make sense really to start going long. And at best, we have maybe another $20 left to the upside. In my opinion, I don't see this as like a viable long opportunity. But those are the two main bullish reasons that I am looking at. And not to mention, we could also look at the weekly chart. Everything, all of the large tech stocks, they all look really, really bullish. Here is bullish reason number 3. So essentially, what we can see here is this is tracking election years. All right. So the blue line is all election years since 1950. And the orange line is election years after more than a 10% previous year since 1950. Okay, so basically, you can clearly see a few things. So at the end of the month, with all election years heading into November, we get a bit of a bearish pullback. But overall, November, December, all of these next months end up being very bullish. So that is the current issue with the environment in the market right now. So now going back to this. Yes, we could make another leg up. We could rise to ES 6000. Okay? That's what everyone is basically going to be gunning for, especially as we get closer and closer to it. I feel like the market is just going to magnetize to that level, and we might just see one just big move to the upside, honestly. And that's what the market is sort of setting up for, in my opinion. Because many people are taking the easy route right now. They're going short at levels of resistance at all-time highs. Completely solid trade. But the issue is that, similar to back in June and July, when people are going short, they over-leverage themselves and stop out when things get way too difficult, after it continues to make highs and highs and highs. So look, just think about the people's psychology here, okay? Think about psychology right here. Let's just quickly think about this. All right. Back in June and July, all right, we just, completely skyrocketed. It made all the sense in the world. From April, we bottomed out in April. We were sub 5,000, right? We rip. Made a new high. Bottomed out, made another new high, okay? Then we gapped up, made another new high. And then not only here did we, gap up, we continued to knock into all-time highs twice, okay? So over here would probably be a really, really good, on paper, it would be a good short opportunity. This candle here would most likely be a good short opportunity to take. We didn't go short here. But on paper, you can understand why people would go short, because this is a level of weakness. This is a weak. It would just look very weak after a major strength. You have clear levels defined. Okay, you could easily stop yourself out at the highs, very simply. All right. What ends up happening is we made new lows. The next day we made new lows, and then the day after that we made another new low. But what ended up happening was we ripped and we ripped. So the people that were short here, now they're underwater on their short, because yes, we got a bit of a move to the downside, but it reversed and it started to rip upwards. Now, not only did we continue ripping upwards for the next few days, right? We got a big, massive move to the upside. This would make things very, very painful for people. When imagine you were in this trade and you're seeing the market go against you. You are in a situation like this where you don't know how much further the market is going to go up. You are hoping for some light at the end of the tunnel, some bearish situation. So you see this big green candle. Most likely, many people ended up getting stopped out here because they just could not take this. Once we, over here, these small little candles, people might stomach it. They might see these candles, these wicks up here. They might say, okay, it's showing some weakness. We should get a pullback. Cool. But this green candle right here really messed up a lot of people. Now, so if they didn't go short here, to make it even worse, right? We got a massive red candle after making another new all-time high on July 10th. July 11th, we ended up getting a massive red candle. This definitely gave people a breather. All right, they were like, "Oh crap, okay, our short might get back into we might get profitable again on the short." No, not that easy. We rip again, and then we make new all-time highs. Up here, I would say the majority of people that ended up trying to short here are not short anymore. They ended up probably going long. And right at the most difficult portion for people to be on the right side of the market, they mess with retail, and all of the people that were short this entire time started to go long up here, and then started to most likely buy the dips. And as they bought the dips, the original idea that they had ended up working really, really well. So, to sum all that up, right? We might get a similar situation heading into the end of October, into November, December, right? We might get a similar situation. And it's important to realize now that seasonality is on the bullish side for the end of the year. And also, it's also important to realize that it becomes a bit bearish into the end of October. So, with that being said, in my opinion, there is that we should get a bit of a pullback, but going short here with time is probably the highest quality trade that you could take, because going long here is not safe. It's really not that safe to go long here. If the market does want to rip upwards, let it. If you're not already long on solid, safe setups. So there are a few solid, safe setups. For example, Amazon. If the market is going to end up ripping, Amazon looks pretty good. We have clear-cut levels. It looks like it wants to rip upwards. Let's just look at the rest of the large tech stocks. AMD, it's crossing above on the MACD. It's starting to rip upwards. This clearly has bullish momentum. We have levels defined. We can, as long as we remain above 167.50, 168, it's going to rip upwards. Let's just look at all of the rest. NVDA doesn't look that great, but it's being pulled up. SMCI, it doesn't look that great for a rip to the upside, but it's, this could have a huge day at any point. And Tesla, Also a similar situation to Amazon. So Tesla is also clear levels defined. If it remains above this bear flag, can be ripped to the upside. If the overall market continues to rip, these are the stocks that are going to help pull it up. The money is going to flow into the losers. And you also want to have money in the winners as well, but money is going to flow into the losers and help pull the market up. So, for example, the reason is that Apple for months and months has been an underperformer with huge rips to the upside randomly. And Apple is also now consolidating. It was one of the only stocks back a few months ago. Apple was doing really, really well. The rest of the tech stocks were not doing as well as Apple was. So Apple is now in a consolidation phase. Money is flowing into the winners. It's flowing into not necessarily a lot of these tech stocks, except, Meta and stuff. Meta is really, really clearly showing a lot of strength. It's the best performing tech stock at the moment. Microsoft is also not really doing too well, but I would rather be long Amazon and Tesla instead of Microsoft, because you could still see that there's more rooms to the downside. And I don't want to force myself on trying to catch a bottom on a beaten down situation here. I would rather play alongside the long. If I'm going long, I don't want to try to catch bottoms on things that can easily continue falling lower. So Microsoft doesn't look too good. Netflix, Amazon, Tesla look decent. And Meta, if you could catch the move upwards, it also looks decent. When we look at the Chinese names, Baba, JD, Baidu. JD made a new high. Baidu. These are not really going to move the market as much as Costco, HD. So Costco is another one that I forgot. So basically Costco, Amazon, Tesla, they are bottoming out in a way that are creating bear flags. And these would be the stocks that could end up ripping upwards. These would be the best performing long opportunities, in my opinion, if the market continues to rise upwards. So if you're bullish in the short term and you think that the market is going to end up making these highs and make another leg up, which is possible if tech stocks and chips continue to rise. Damn, I miss making YouTube videos. It's been a very long time since, it's very nice. But yeah, that's basically the game. If you get time on these puts, most likely it's the best trade to make. We're already long. I don't want to add to longs here, but there is more room to go to the upside based off of the MACD and the advanced decline indicators, as well as the large tech stocks that are performing really well. Also, given the fact that HD, literally every sector is doing really, really well. So, it's kind of tough to be extremely short. We might just have to let the market make another move to the upside and then see what ends up happening. But anyway, for the levels to the downside, right? So now, for example, if we end up rising upwards, right? The move to the downside. Say we hit 6,000 on the SPX. Let's look at percentage losses for potential pullbacks. So if we hit 6,000 on the SPX, I'm most likely just going to automatically go short. And so just looking at a 5% drop from 6K, we end up seeing 5,700. So that's almost as if nothing really happened. From here, or here, these would all be long opportunities and head into a new high into the end of the year. If we end up not making 6K and instead we stop at 59, more than likely we end up seeing 5,650. More than likely we end up seeing 5,650. And what I generally do want to see is an overextension. I really, really want to see an overextension. I want to see these Bollinger Bands contract a bit more. You can see the Bollinger Bands contracting upwards and downwards here. And I want to see the SPY start to trade outside of the Bollinger Bands comfortably and just knock on this level. And as it does that, shorting is, I'm almost going to be very, very positive that I'm going to most likely really short. And we just have to see over the next few days and to the end of the month how this ends up paying out. Going long here is not, it's not the safest because your risk is, the risk reward is not there because you're hoping that buyers step in and just exuberantly continue buying as they did in June and July. That is not a sustainable trading method. And instead, if you aren't already long, it makes sense to just be patient, wait for the next best trade setup. The next best trade setup, in my opinion, is if we get a new leg up and we end up seeing 5850 to 5900 on the SPX, on the ES. Once we get there, 5850, 5900, getting to short a bit more aggressively makes more sense. But if you do want to take a position, getting into puts for maybe even 6 months out, letting this play out, and then getting a pullback, the 6 month out puts are going to be profitable once we end up retesting down here. So that's my thought process. This is my thought process for the overall market. We're getting some bullish indicators, but they're not necessarily a reason to just be completely bullish. There are tech stocks and there are Costco, for example, that were giving some good bullish opportunities in the short term. If those stocks end up doing really well, if Apple continues to do if Apple does really well, Meta can just continue rising. So Meta has this fib extension level at 630. So this is a 4.236 fib extension level. I was monitoring this 3.618 fib level from back in, I made this level back in 2021 from the recent highs to the recent lows, and I looked at fib extensions to the upside. And we started to find support at 431. And then at 507.60, this also was a major level of support and resistance, which is crazy. And then once we hit this 3.618 level, you could see how almost crisp this level ended up being. So to the upside, we can see 631. If Meta ends up getting here, it will end up helping pull the rest of the market up. And the losers that are making these bear flags, the bear flags will be breaking upwards. And the entire market will end up making new highs. The ES will end up seeing 6,000. And essentially it. We're long. We're comfortably long. We're living life. I might start entering into puts, but that's what it is. We have another $15, $20 on the SPX, on the SPY. But the higher we go, the higher opportunity there is that we're going to fall, because there needs to be a pullback before elections and before the end of the year, and for us to just continue to rise and rise and rise. That could also happen. So if that ends up happening, we have to monitor not only the VIX. So look, we can continue rising. This can defy all logic. This can happen, right? June, July can happen, but we can just continue making highs and just ride along a trend line, and we will just never pull back. So that's also possible. And it's important to manage your capital in a way where you don't lose all of your money if we end up never pulling back. So now that's why it's important to enter in batches, not get too crazy with your position sizes. And yeah, these next few weeks and months are very, very historical. And it's going to be really interesting to see what ends up happening. And Yeah. So aside from that, I guess with that being said, we can't really say much else. We look at what the market gives. We try to judge what the best opportunities are in the market, and we take it one step at a time. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. 25 minutes long. But yeah, love you guys. Have a good one. Take care.